Welcome back. Interest rates are now in the fives, just slightly, but they're starting to get there. 5.99% is where we're sitting today. Guys, I'm super jazzed about this, and I will dissect in just a second, but we're going to go over a little bit of that today. Then we're going to talk about interest rates going down and what my theory is going to be for the 2026 market. And then lastly, we're going to touch on the bill that was proposed to prevent institutional investors from buying single-family homes. Is this a good idea? Is it not? So pay attention. It's going to be a good day. First, guys, let's jump right into it. The interest rates are hitting that 5.99% on a 30-year average conventional fixed rate. Now, this is exciting to see because 2 years ago, it was 8%, 7.75. It was up there, and I've sold homes at that price, and I was like, holy shit. I was closing on a couple of homes, and I'm looking at the interest rate and that monthly payment, and I'm like, wow, this is way different than a few years ago. But I still don't think that sellers have really caught up to the idea of that price shock just yet, because there's still a lot of houses on the market. In across the country, here in my location, houses are still selling like crazy. I mean, North Dakota is an awesome place because our economy kind of separates a little bit differently than across the United States, where we have a strong natural resource environment in our economy. So things are pretty strong here. I mean, we're still selling houses, man. We're still selling a lot of houses. The inventory is pretty damn short. I think the absorption last time I saw was like 1.5 months. But anyways, so that 5.99%, is it a good thing? It is a good thing. Is it as big as everybody thinks? Not really. No, it's not. I mean, like it's good to see those fives. There's a psychological level about seeing that 5 in front of the interest rate, and I think more people are going to go to their lenders and get pre-approved. Applications are starting to go up a little bit for the application for God's sakes, I can't even talk today. I'm so tired. But applications for mortgages, those are starting to go up. So that's a good thing to pay attention to. But what I really wanted to dissect into is the conversation a little bit more about how they plan to bring down the affordability cost for
people have built a lot of wealth through their home ownership. For the whole thing to get fixed, do we need to see housing prices come down meaningfully, or can you somehow thread that needle without that happening?
The biggest component is that we need mortgage interest rates to come down, and as you just said, there's been a lot of progress on that. If we can get some of the unnecessary costs out of home ownership, so if you look at the permitting costs for new home construction, we ought to see what we can do to put pressure on states and municipalities to bring down the cost of new construction. The president's right that what we don't want to do is depress the cost of existing homes, but for the purpose of construction of new homes, we should be doing what we can to work with states and municipalities to bring down permitting costs, zoning restrictions, and construction costs so that new construction can be affordable for new families.
Okay, so let's dive into this for just a second, okay? So there's two things that he paid attention to. One, they don't want to drive pricing down, and two, they want to incentivize builders. So they believe, and right now the current administration believes, that people who have equity in their homes should keep that equity. What a theory. That's awesome, right? They have to create new ways to create more inventory without crushing the economy and bringing housing prices down. So what they're going to be working on and what their focus is they're going to start working on peeling back the red tape for builders. I can say, as a builder who does about 100 homes a year, I think we did 109 last year. Anyways, we do see a lot of this. It does come down to a local municipality, though. So, I mean, local government is the one making those decisions, local engineers, etc. Zoning is a big thing. I mean, zoning, I guess, in bigger areas is for here. It's not that bad. I mean, we work through it. We do a lot of PUDs, PUDs, planned unit developments. It gives us more freedom for what we want to do in those developments. But we do, not only are we a builder, but we're also a developer. So we have an umbrella effect, right? And I won't even get into it right now. But peeling back the red tape so we can actually build homes more affordably is going to be huge. I mean, it really is. But there's one thing that I think that we're still going to see. It's been talked about. It hasn't been brought up recently, but that 50-year mortgage that everybody's been dreading. I don't think it's a great idea. I mean, you're going to end up paying a shitload more interest over time. And, I talked to a guy today and we were talking about an investor buddy of mine. And we were talking about how people don't understand how interest rates work sometimes. And I mean, if you're not in the industry, you're not going to know, but 6%, not 6% of the loan, that's 6% a year. You're compounding that over the course of 30 years. I shouldn't say compounding. It's not quite compounding, but you're paying 6% a year. So that does add up significantly. You're paying a shitload of interest. Like whether you're at 2% or 7 or whatever, I mean, you're still paying a lot more money than you might think. And so the argument that I always hear is no one's ever going to pay off their home. Nobody pays off their home to begin with. Like, yeah, they do some, but very few. I mean, that's not a conversation anybody I know is having. They're just trying to figure out how to get into a home to begin with. So what we're witnessing now is that they are trying to incentivize builders to put more homes in the ground, and they're simultaneously trying to bring down that monthly payment. So when the inventory starts to rise, people can then correlate, which means we won't see a crash like everybody was talking about. Everybody thinks that crash is coming. I already think we're kind of in the middle of it. I really do. I shouldn't even say a crash. I think a shift in the market, right? Things are different now. It's not easy to sell a house like it was in 21, 22, but I also still think that people were in that time frame. There was such low interest rates that people still have that shock of what their house is actually worth. And a lot of people overpaid for their house in 2020. Don't get me wrong, you still made equity, a lot of it. But getting back to a normal neutral market is different. And I don't, there's a lot of realtors when I was serving bartending still around 2020, 2021. There was I remember specifically walking through, and there was a realtor at every table. Every table, somebody's like, yeah, I'm a real estate agent. 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 None of them are around right now. I'll tell you that right now. I know that none of them are around. I work in the industry. I do a lot of business here in Bismarck, North Dakota. And the reason is a lot of people got into the industry because it was easy. It was a quick grab for money. And then as soon as the market went back to normal, everybody's like, oh, it's hard to sell a house. Like, I mean, it is, but it isn't. You know what I mean? Like, you just kind of have to know what you're doing and understand the economy and understand things. But anyways, right now, the main focus is monthly payment. That 50-year mortgage is not off the table. They do that. They bring in Mike Walsh. Crap, I can't remember the new Fed's appointee. I've read every article about him I could possibly find, and I still can't remember his name. Oh, God. That's going to bum me out. Anyways, all right. But if you've listened to interviews about Walsh's interviews, he talks about restructuring the Federal Reserve. And I think that is going to bring interest rates down because they're going to do stuff differently. I don't think this is going to be the same Federal Reserve that we've seen for the last 20 years. I just don't. And you combine all of these factors, and there's more on there, but longer mortgages, lower interest rates, a different way of attacking this situation. I think things are going to change. I'm optimistic. I'm staying optimistic. I'm not going away from that. I love being the optimistic person. There's a lot of people out there that talk about the negative doom and gloom, and they're saying, well, the world's going to end. And you know what? I do appreciate that. It does get views, and it does give us a good, different opinion. And I watch all of that stuff because you have to have both sides of the spectrum. If you're always excited, you're never going to really understand what's going on, right? So the only other thing I was going to dive into today, I'll keep it kind of short and smooth today. I know we're at about 10 minutes, 8 minutes, but this bill was just proposed in the Senate. So let's dive in for a quick sec. We'll tidy it up, and then we'll have a good night.
Alone in taking up that fight. Listen to this.
It's just not fair to a first-time home buyer who comes in, they pick a house, they've got their financing in place, and then it gets scooped up by some billionaire investor who can pay all cash.
The premise is very simple. We want to make certain that single-family homes are available to American citizens to be able to build their version of the American dream and not have single-family homes be sucked up by Wall Street firms that jack up prices and keep people as perpetual renters.
All right. They proposed a bill, both on the Republican and Democrat side, to eliminate institutional investors from buying single-family homes. Is this a good idea? I mean, I don't think people realize, like, they do buy a lot of homes, but it's not really to the extent that everybody thinks it does. And I mean, this is going to make headlines. It's going to make a difference for a lot of people. But I think it's good for now because there's a low inventory. But when we get to the point again where inventory is high, who's going to buy up all those homes? Because a lot of people aren't going to be able to afford those homes when that time comes because just like everything else, it's cyclical. What are we going to expect? So this one is kind of an interesting one. Like, institutional investors, they were talking about, what did they say? What was it? I think 150 million in assets, and then anything above that, 150 million and above. But do you really think that's going to change the market? No, it's not. It's going to make a change. It's going to be different, but we'll find out sooner rather than later what that looks like. But that's all I have for today. Just really wanted to jump into what we're kind of looking at and what the optimism is going to be. So thanks for watching. Have a great day.